So now it says, please inform. Please inform the landlord and the landlady, the land uncle and the land auntie. Right? Please inform the landlord and the landlady regarding your deposits, your records, your dues, your unrecorded income, your undisclosed income. There's no talking, please. Right? The repayments and the issue proceeds. Please inform the landlord and the landlady regarding your deposits, records, dues, undisclosed income, repayments and issue proceeds. Please inform landlord and landlady regarding your deposits, records, dues, undisclosed income, repayments and the issue proceeds. Now, why to inform all of this to the landlord and the landlady? Because of fraud was done by Nidhi, who was a related party. Why to, you're saying, ma'am, why to give all this information to landlord and landlady? Because fraud was done by Nidhi, who was a related party. So now to very interesting. Oh, fraud had happened. Oh, Nidhi did a fraud. She was a related party. Oh, okay. Who found out? How they came to know that the fraud was done? It says internal auditor found out. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI. She entered into a non-cash transaction without registration with the RBI. So please inform landlord and landlady regarding 6 things. No change in the sequence. Deposits, records, dues, undisclosed income, repayments and issue proceeds. Why? Because the fraud was done by Nidhi, who was a related party. Who found out? Internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. Right. Then there is a lot of bad news for the company. Right. Bad news is just our keyword over there. What is the bad news for the company? The company has incurred the cash losses. Right. Then the company, the statutory auditors of the company has resigned. So resignation of the statutory auditors. Right. No need for you to talk. Right? Absolutely keep your mouth shut. Right? Then whether also there is a material uncertainty regarding the ability to meet the liabilities. So there are 3 bad news for the companies. What are the 3 bad news for the company? Company has incurred cash losses. There is resignation of the statutory auditors. Also there is material uncertainty regarding the ability to meet the liabilities. And then we have 2 points regarding the C. What are the 2 points regarding the C? CSR and the CFS. Right? The corporate social responsibility, the corporate social responsibility, and we also have the consolidated financial statements. Right? The consolidated financial statements. Right? So what is the story we have over here? Right? Please inform the landlord and the landlady regarding the deposits, records, dues, undisclosed income, repayment and issue proceeds. Why to inform all of this? Because the fraud was done by Nidhi, who was a related party, who found out internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. Then there is a lot of bad news for the company. What is the bad news? Company has incurred the cash losses. There is resignation of the statutory auditors. There could be a material uncertainty regarding the ability to meet the liabilities. And then you have the 2 points regarding the C, the CSR and the CFS. Right. So clause 1, which is regarding the property, plant, equipment, intangible assets. Right. Clause 1. P, property, plant, equipment, intangible assets. Clause 2, how do you write the clauses of Caro? Small Roman number. How do you write down the clauses of Caro? Small Roman number. Right, then clause 2 in I, which is the inventories and the working capital. Inventory and the working capital. So that is I. L. Clause 3, L. Clause 4 also L. What is the L? L-I-G-S, L-I-G-S. What is L-I-G-S? Loans, investments, guarantees, securities. Loans, investments, right? Investments, guarantees and securities. Loans, investments, guarantees and securities. So landlord, landlady, both of it is L-I-G-S, L-I-G-S. But obviously it's different in reporting. One is the nature of transaction and second is the compliance with the provisions of the Companies Act. We'll come to that. So P-I-L-L, please inform landlord, landlady. P stands for property, plant, equipment, intangible assets. I stands for inventory, working capital. L stands for L-I-G-S. Clause 3 and clause 4 also L stands for the L-I-G-S. 5 is deposits. Clause 5, deposits. Clause 6 is regarding the cost records. So it is not only records, it is the cost records. 7 is regarding the statutory dues. Right? 7 is regarding the statutory dues. So cost records and the statutory dues. 8 is undisclosed income. 9 is repayment and 10 is issue proceeds. Right? 10 is issue proceeds. That is why we cannot change the sequence of informing the landlord and landlady. If you change the sequence, the clause numbers will go. So you have to inform it in this sequence. You will inform the landlord and landlady regarding your deposits, your records, your dues, your undisclosed income, your repayments and the issue proceeds. You are not allowed, not supposed to change the sequence. Right? Clause 11, fraud. Clause 12, Nidhi company. Clause 13, related parties. Clause 14, internal audit. Clause 15, non-cash transaction. Clause 16, registration with RBI and the NBFCs. Right? Clause 17, cash losses. Clause 18, resignation of the statutory auditors. Clause 19, material uncertainty regarding the ability to meet the liabilities. And 20, CSR and 21, CFS. Right, 20 CSR and 21 CFS. Right, so just I think in the beginning we need to do a little bit of adjustment, like please inform landlord and landlady. Then almost our story only tells us the clauses. Right, then it is almost that our story is only telling us the clauses. Right, so please inform the landlord and the landlady regarding the deposits, records, dues, undisclosed income, repayment, issue proceeds. Why to inform all of this to landlord and landlady? Because fraud was done by Nidhi, who was a related party. Who found out? Internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. And then there is lot of bad news for the company. So bad news is not a clause. Bad news is only for us to remember. Right? What is the bad news? Company has incurred cash losses. Then there is the resignation of the statutory auditors. There is material uncertainty regarding the ability to meet the liabilities. And then there are 2 points regarding the C, the CSR and the CFS. Right? More regarding the clauses after the break. Right, so we have started with our discussion regarding the Caro 2020, right? The company's auditors report order 2020, right? So before we again start with and have a more discussion regarding Caro 20, do you remember the 143.3 which we discussed yesterday? 143.3 which we discussed yesterday? What was it? 10 points of reporting. What were the 10 points of reporting? Information proper, branch books, AS adverse, directors maintenance, IFC others. Under the others, what were the 6.7 points which were there? 143.3J, and there we had the others, A, B, C, D. E we had the E1, E2 and the E3, and then we had the F and the G, right? So A, pending litigations. B, material foreseeable losses. C, delay in transferring amount to investor education and protection fund. D has been omitted. E, no loan has been, funds have been advanced, no money has been received, right? And also the representations do not contain any material misstatement based on the audit procedure performed. Then dividend paid or declared, whether it is in compliance with the provisions of section 123. And also what is the last one? The audit trail, right? Whether the accounting system of the company, does it have an audit trail feature, and the OTP, right? So yesterday had we seen the Reliance Industries report? Right, Reliance Industries report. Had we seen the points of reporting of 143.3? But yes, so today we'll see the Infosys report. And if you see the Infosys report, even the latest points which have been added, the E1, E2, E3 and the F and G, even those points the auditors have reported in the 2022 report. Right, so the company has disclosed the impact of the pending litigation. Company has made a provision for the material foreseeable losses. There has been no delay in transferring amount to investor education protection fund. Then I've already told you D though has been omitted. That specified banknote. So now what is the point which we have over there? That no funds have been advanced, right? Company to intermediary and intermediary to the ultimate beneficiary. So the management has represented, right, which are material either individually or in the aggregate, right, that no funds have been advanced or loaned or invested. And the management has represented that no funds have been received. So no funds have been advanced, no funds have been received. And based on our audit procedures, nothing has come to our notice that caused us to believe that the representations contain any material misstatement. Right? Then what is the next point we had? The dividend. Declared or paid during the year, whether it is in compliance with the provisions of section 123 of the Act, and the board of directors, right? It talks about the proposed dividend, and that audit trail, accounting software has an audit trail feature. It is applicable with effect from 1st April 2022. So it will come in the audit report of 31st March 2023, right? But whatever new points, did you see that the auditors, have they started reporting? Right, have the auditors of the company already started reporting? And this is also an audit report where we'll get to see the reporting under Caro 2020, right? Not under the Caro 16, but under the Caro 2020. Right, so then we have the annexure 1, which is regarding the IFC, the internal financial control, and then the annexure B, which is regarding the Caro, right? So as we study the reporting clauses under Caro, we'll keep on coming to the audit report of Infosys, right? Wherein we'll also get to see that how actually the reporting is done by the auditor. So do you think that whatever we study in audit is not theoretical at all? Right? Though it looks like it is based to be a theory subject, but does it have a 100% practical implication over here? Yes, right? So what are we discussing over here? We've already discussed the story of the 21 clauses of Caro 2020. And what is the story which we have? A very easy way for us to remember the clauses of Caro. What does it say? Please inform the landlord and the landlady regarding the deposits, records, the dues, undisclosed income, repayment and the issue proceeds. Why to inform all of this? Because the fraud was done by Nidhi, who was a related party, who found out internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. Company has incurred the cash losses. Resignation of the statutory auditors, material uncertainty regarding the ability to meet the liabilities, and 2 points regarding the CSR and the CFS, right? The corporate social responsibility and the consolidated financial statements, right? So have you already written this one chart? Right, regarding the 21 clauses of Caro, right? How do you quote a clause of Caro in your paper, or how do we generally write a clause of Caro? We write it as the small Roman number, right? So clause 1 up to 21, it all comes in the small Roman number, right? Clause 1, clause 2, clause 3. You don't write a 1, 2, 3, or you don't write a 1, 2, because that is not how the drafting is done under the law. The law has drafted it as a small Roman number, right? So clause 1 up to 21. And all the clauses of Caro have been given under the para 3 of Caro 2020. So if you look at all the 21 clauses of Caro, under where in the order have they been given? They've been given under the para 3 of Caro 2020. So para 3 of Caro 2020 is going to be remaining constant in our answer. What is only going to be changing is the clause number, right? Only what is going to be changing is the clause number. Otherwise, everywhere it is clause dash of para 3 of Caro 2020, right? Of para 3 of Caro 2020. Is it clear to everyone? Okay, right. So we've horizontally prepared a chart or a story over here. Now what we will do, once again, we'll prepare a vertical list, right, of all the clauses of the Caro. So what is clause 1? Property, plant, equipment, intangible assets. 2, inventory, working capital. 3, loans, investments, guarantees, securities. 4, again, loans, investments, guarantees, securities. All of you keep writing with me, right? Clause 5, it is regarding the deposits, right? Clause 6, it is regarding the cost records, right? 7, it is regarding the statutory dues, right? Statutory dues. 8 is regarding the undisclosed income, right? The undisclosed income, right? 9 is regarding the repayment of loans or other borrowings. 10 is regarding the issue proceeds, utilization of the issue proceeds. So this is clause 1 to 10. Please inform landlord and landlady regarding deposits, records, dues, undisclosed income, repayments and the issue proceeds. Why to inform all of this? Because fraud was done by Nidhi, right? Fraud was done by Nidhi. So we call it Nidhi company. Who was Nidhi? She was a related party. Fraud was done by Nidhi, who was a related party, right? So that is clause 11, 12 and 13. That is clause 11, 12 and 13. Who found out that Nidhi has done a fraud? Internal auditor. What did he find out? What type of fraud Nidhi has done? She has entered into a non-cash transaction without registration with the RBI, without registration with the RBI, right? Then after that, what is there next? There is bad news for the company. What is the bad news? Company has incurred the cash losses. Then also there is the resignation of the statutory auditors. There is resignation given by the statutory auditors. Are you all with me? Right. Then after that, 19, there is the material uncertainty regarding the ability to meet the liabilities. There is the material uncertainty regarding the ability to meet the liabilities. And then last, we have 2 points of C. What are the 2 points of C over there? CSR and the CFS, right? So corporate social responsibility and the consolidated financial statements, right? So corporate social responsibility, and then you also have the consolidated financial statements. So what we had earlier written in the horizontal format, same thing have we now written over here in the vertical format? Right, the same content, only I've put it in a different format, right? It's always better for us to look into any content in different formats, right? All of you pay attention, keep writing, right? Writing is a very important ingredient to remember, to memorize, to recollect whatever we are studying in the subject of audit. Don't be under the false notion that listening is going to be enough for you and it's there in the book. In books, it's there in hundreds of books. You go on Google, it's there. You just put it on Google, you'll find, 10 lakh findings in 0.03 seconds. And if you put Caro 2020 or you put any section of the Companies Act, Google gives you so many search findings over there. But those search findings, data is abundant. But how we analyze it, how we arrange it and segregate it, that is very important for us, right? So yes, my continued request to all of you to ensure a more higher level of sincerity as you attend the class. Okay, so please inform landlord and landlady regarding the deposits, records, undues, undisclosed income, repayment and issue proceeds, because the fraud was done by Nidhi, who was a related party. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI CI, company has incurred the cash losses, resignation of statutory auditors, material uncertainty regarding the ability to meet the liability, CSR and the CFS. So as such, these are the 21 clauses of Caro. But putting together the sub-clauses, like, if I look into the fragments, the part of it, there are actually 49 points of reporting in Caro. To tell anybody, it is 21 clauses of Caro. But under many of these, and like 5 clauses out of this are very big. Like the first clause, property, plant and equipment, intangible asset, that is clause 1. Under clause 1, you have small a. Under small a, you have capital A, capital B. And then you have the 1B, 1C, 1D and 1E. Right, so clause 1 of Caro, when I discuss with you, it is going to be clause 1A. In 1A, you have capital A, capital B. Then you have clause 1B, clause 1C, clause 1D, and clause 1E. Right, what am I talking about? Simple this. Clause 1, small a, capital B. Then clause 1B, clause 1, clause 1D, and clause 1E. Are you understanding what I just said? Clause 1, property, plant, equipment, intangible asset. Under that we have A. Under A we have capital A, capital B, then the B, C, D and E. Right, then we have clause 2, which is regarding inventories. Inventory just has an A and a B. Right, clause 2A, inventory, clause 2B, working capital. Right, so 2A and B. Then clause 3 is again small a, capital B, then B, C, D, E and F. Right, so that's how life is going to become interesting. Right, so no need to be happy, oh clause 3 LIGS. Now clause 3 LIGS, full story. Small a, capital B, B, C, D, E, F. Right, then clause 4, happy, only clause 4, no A, B, C, D, nothing. Right, clause 5 also simple, right, same, just as it is, clause 5. Clause 6, again happy, right, so few are very huge, few are small also, so no need to worry much, right, so 4, 5, 6, clean. 4, 5, 6 simple ones. Clause 4, LIGS, clause 5, deposits, and clause 6 also cost records. Clause 7 is 7A and 7B. Clause 7 is clause 7A and 7B. Right? 8 is just 8. Right? So just you have the clause 8. Right? Simple, just you have over there is the clause 8. Clause 9 is again A, B, C, D, E. Right, clause 9 is again having the A, B, C, D, E. Right, so if we come to the clause 9, right, it has the A, B, C, D, E, F also rather. Right, it has the A, B, C, D, E and F. Right, so that is the clause 9. Then clause 10 divided under 2, A and B. I hope you are able to understand what I am talking about over here. Right, so clause 10 divided under A and B. Right, then 11 divided under 11A, 11B, 11C. So now for fraud also there are 3. 11A, 11B, 11C. 12 again A, B, C. Right, 12 is again A, B, C. 13 is again just 13. Right, 13 is again just 13. Nothing more to it. Right, so 13 itself is a clause. There is no A, B further parts into it. Right, 14 is again having 14A and 14B. Right, 14 is having the 14A and having the 14B. 15 is just 15. Right, 15 is just the 15 and 16 is again having the A, B, C, D. Right, 16 is again having the A, B, C and D. Right, 16, clause 16 is having the A, B, C, D. Right, 17, 18, 19, just as it is. Right, so 17, 18, 19, just simple, just the clause, no subparts over there. 20 is again having 2 parts, 20A and 20B, and then 21 again simple. Right, 21 again just 21. Right, so if you take the totals of all these A, B, C, D, then it comes to 49. So Since there are 21 clauses, but if you take the totals of all this A, capital B, and the B, C, D, E, F, all of them, all that sub-clauses also put together, it's coming to the 49 clauses, like including the sub-clauses, it is coming to the 49 clauses. Are you getting that? 49 points of reporting, I can call it, because clauses are as such how much? 21 clauses of the reporting. Okay, right? So which are the direct ones? If I would like to analyze it, 4, 5, 6, right? These are direct, no? Right? 4, 5, 6, are they direct? Yes. Then again 8 is a direct one. Then 13, right? So 4, 5, 6, 8, 13, right? Then after that the 15, right? Then the 17, 18, 19, and also the 21, right? So 4, 5, 6, right? And then after that the 7, 8, 9, 10, right? So around 10 clauses are the out of the 21 clauses. If I see 10 clauses, they are having no sub-clauses over there. Out of the 21 clauses, if I see 10 clauses over there, they are not having any sub-clauses over there, right? They are the simple ones. And the big ones as such as clause 1, clause 3, the clause 9, and the clause 16, which is again having A, B, C, D. Right? So that's just for our understanding, more of remembering, different ways in which we can analyze the clauses of Caro. Right? So now, do you know what are the titles of the 21 clauses of Caro? Right. And do you also have an idea of what is this A, what I have written over there? A, capital A, B, B, C, D, E, and then 2, A, B, and then 3, we have 3, A, capital A, B, and then we have the B, C, D, E, F. Right? Everybody, are you understanding that? Right. So now what is our main journey? Our next journey in Caro now? Now to study or know each of these 49 subclauses of reporting under Caro. Right? What we have already studied is the applicability of Caro. And now what is going to be the next part of our journey? To look into the the clauses of reporting under each of the clause of Caro. Right? Can everybody once again tell me the story of the clauses in Caro 2020? Please inform the landlord and the landlady regarding the deposits, the records, the dues, the undisclosed income, the repayments, and the issue proceeds. Why to inform all of this? Because of fraud was done by Nidhi, who was a related party. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI. Company has incurred the cash losses. Statutory auditors of the company have resigned. Material uncertainty regarding the ability to meet the liabilities. And then 2 points of C, the CSR and the CFS. Absolutely, you cannot make any change in the sequence of the story. Any little bit here and there you make a change in the sequence, the clause numbers will move here and there. And mainly you can't change those 6 points. Please inform landlord and landlady. What are you going to inform them about? Deposits, records, dues, undisclosed income, repayment, and the issue proceeds. And then we connect that story saying why to inform all of this? Because we say fraud was done by Nidhi, who was a related party. Who found out? Internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. So actually story ends at clause 16. The story which we prepare about informing landlord and landlady, it ends at clause 16. Then 5, we remember it in a different way. Out of 5, 3 we say is the bad news. What is the bad news? Cash losses. Then the resignation of the statutory auditors. Then material uncertainty regarding the ability to meet the liability. And then CSR and CFS. So now the bad news. Can you change the sequence of the bad news also? No. First, what is the bad news? Cash losses, and then after that there is the resignation of the auditors, and then you see, oh, this company doesn't have the ability to meet the liabilities also. So what happened? Auditor was doing the audit, and then when auditor was doing the audit, he came to know, oh, this company, it is incurring cash loss. What is a cash loss? We'll come to that. Right, so auditor says, doesn't look very good, this company, they are incurring cash losses and all. I think my audit fee will become bad debt. And he says, my audit fee will become bad debt. So he says, let me run away. So he runs away. And resignation of the auditor. And he says, see, very good, I ran away. They don't have the ability to meet the liability. You understand? So don't change the sequence. You cannot say, ma'am, any bad news. Let me tell any news anytime. No, no. You have to maintain the sequence. So first what happened? Auditor came to know that the company is incurring cash loss. He says, I am running. I am going away. Right? He resigned. And then he resigned and he says, good, I resigned. See, they have an uncertainty, material uncertainty regarding their ability to meet the liabilities. Okay, right. So now let's come to clause 1, which is regarding the property, plant, equipment, intangible assets. PPE, property, plant, equipment, and the intangible assets. Okay. Right? Property, plant, equipment, and the intangible assets. Are you understanding the perspective of Caro? What is it? Okay, now these points are given like 1A, capital A, B, B, C, D, E. And I am the statutory auditor of the company. And to this company, Caro is applicable. And now as an auditor of the company to which Caro is applicable, I need to report on the following points. Right? So already I am reporting on true and fair view. Already I am doing 6 points of inquiry. Already reporting on 10 points of 143.3. In addition to that, they are telling auditor report on more of these 21 points. So, for a private limited company, the moment Caro becomes applicable, we have to increase the audit fee. See, public company, to Caro is always going to be applicable. But private company, we have that 1 crore, 1 crore, 10 crore. No. If Caro is not applicable, less of checking. So, audit fee can be like, say, 10 lakh, 15 lakh. But say Caro becomes applicable, we have to increase our audit fee. Why? Because so much additional reporting is required to be done by the auditor. Right. So, clause 1, property, plant, equipment, intangible asset. 1, yes, clause 1, in that the clause, subclause A over there. And what is the capital A over there? Whether the company is maintaining the proper records. Right, listen to me. 1 or 2 clauses, if you get the gist of it, okay, what is happening in Caro, you'll get the flow of the remaining 21 clauses also. And exact clauses of Caro, as I've already shown you the question bank, whenever the clauses of Caro are coming, you have to write down the answer verbatim. Verbatim means word by word. Right? Word by word. You cannot show your creativity, your English, your grammar, your vocabulary in writing those answers over there. Right? Law answers, legal answers, these questions where it's a company law based question. You cannot have your own writing of the answers over there. Right? So whether the company is maintaining the proper records, right? Showing full particulars. Right, whether the company is maintaining the proper record, showing full particulars, including the quantitative details, and the situation of the PPE. PPE, property, plant and equipment. Now, yes, let us think of what is this clause about. Okay, statutory auditor of the company, you have to report. What you have to report? Okay, regarding PPE, do you know what all comes under PPE? Right? The property, plant, equipment, land and building, plant and machinery, furniture, fixture, computer equipment, leasehold, freehold land, all the tangible assets of the company. Right? All the tangible assets of the company, auditor, you have to report whether the company is maintaining the proper records. Can anybody tell me what would you mean a proper record for PPE? Obviously, it would be the PPE register. And obviously, it would be the PPE register, the fixed assets register of the company, showing full particulars. Can anybody tell me what would you interpret full particulars as? Right? Serial number, asset ID, cost of the asset, description of the asset, date of purchase, date put to use, incidental expenses, total cost of the asset, rate of depreciation, accumulated depreciation, depreciation for the year, assets added during the year, assets sold during the year, assets revalued during the year, assets impaired during the year, assets written off during the year. Right, you understand? So at disposal, assets which have been held at disposal, then also the foreign exchange fluctuation, residual value of the asset, full particulars. Right, what does it say? Full particulars. Like say Infosys, it has 1 lakh employees. Right, so Infosys, if it is having 1 lakh employees, they have offices across India and across the world. They will at least be having 2 lakh chair or 1 lakh chair at least they would be having. They would be having 1 lakh laptops. You understand? So whether it says whether it shows the full particulars, including the quantitative detail. So Infosys cannot say that we have 20,000 air conditioners. They also have to give quantitative detail. Each of the AC, air conditioner of Infosys, where it is. Like say, if this building, it has 40 ACs or it has 100 ACs. So are those 100 ACs in one room? No. Like say 20 ACs are in this room. Just as an example I'm saying. Right? So 20 ACs are in this room. So why this quantitative detail and situation should be given? So that tomorrow when the physical verification of the asset is to be done, it is going to be possible. Okay, tomorrow if Infosys says we have 20,000 ACs, we have 1 lakh chair, we have 1 lakh laptop, where do I go and find out these 1 lakh chair and 1 lakh laptop and 20,000 or 2,000 ACs or so? That is why it says the quantitative detail and the situation. So AC, though I can write, no, that AC is in this building, this classroom, this floor or whatever. But laptop, where do I write? Where is the laptop? So in case of laptop, what do I write? I write down the employee to whom that laptop has been given. So AC, I can write down the location of the AC, but laptop, can I write down the location of the laptop? Car, can I write down the location of the car? No. So there I will write down to whom, to which person that asset has been allotted in the company. Are you understanding? So whether the company is maintaining the proper record showing the full particulars, including the quantitative details and situations of the PPE, right? So if you look into, this is the Infosys report. Annexure A is the IFC and Annexure B is the, right, Caro reporting. What does it say? To the best of our information. This is favorite sentence of auditor. Every time, to the best of our information and according to the explanations provided to us by the management and the books of accounts and records examined by us in the normal course of audit, we state that. So they don't even say we report that. They say we state that. What do they state? That in respect of company, PPE and the intangible asset, the company has maintained proper record showing full particulars including quantitative detail and situation of the PPE and the relevant details of the right of use assets, right? Even that is a type of PPE over there, right? So including the quantitative details and situation of the PPE. So is it 1A capital A? Right, same reporting of what we are seeing over there. Okay, right. Then what is 1A capital B over there? Again, whether the company is maintaining the proper records showing the full particulars of the intangible assets. Will I write quantitative details and situation? No. How can there be quantitative details of patent, trademark, copyright and computer software and so? So it says proper record showing the full particulars of the intangible assets. Right. So the company has maintained the, right, look into the Infosys report, proper record showing the full particulars of the intangible assets. Company has maintained the proper record showing the full particulars of the intangible assets. Right, so this is the Infosys report of Caro 2020. Right, so all the 21 clauses of Caro have been reported over there. And then you see at the end, right, again the auditors. Obviously, it's an annexure to the audit report. Right, it's an annexure to the audit report. Right, so for Deloitte, Haskins and Sells. And again, the 3 number, firm's registration number, membership number and the UDIN, the unique document identification number. Right, date of the report has also been given over there. Right, clear to everyone? Right, so will it be more convenient for us to understand the clauses of Caro by looking into this report over here? Okay, right. So that's the 1A, capital A and the capital B. So what auditor you have to report? Proper records. What you have to report? Proper records. Okay, so now what happens in CA final in this particular clause over here? We also discuss what are the audit procedures. Okay, what verification is to be done by the auditor in order to report on these particular clauses of Caro. Right, then clause 1B. Right, whether the property, plant, equipment, obviously intangible assets, can you do physical verification? Intangible assets, can you do physical verification? No. So only whether the property, plant, equipment, whose responsibility? Physical verification. It is the responsibility of the management. So whether property, plant, equipment has been physically verified by the management at reasonable intervals. Physically verified by the management at the reasonable intervals. right? Reasonable intervals, and any is physically verified by the management. Obviously, whose responsibility physical verification? It is the responsibility of the management. So whether PPE has been physically verified by the management at reasonable interval, and any material discrepancies noticed on physical verification, whether any material discrepancies noticed on physical verification, have they been properly dealt with in the books of accounts? Right? Any discrepancies noticed, material discrepancies noticed on physical verification, have they been properly dealt with in the books of account? Okay, so now physically verified, whose responsibility to do the physical verification? Management. What does it say? Auditor, you need to report that whether fixed assets, property, plant, equipment has been physically verified by the management at reasonable interval. Now, what would be considered to be a reasonable interval for physical verification of PPE? It says when the reasonable interval, the interval would be considered to be a reasonable interval when the time gap between two physical verification is not more than 3 years. When that's all fixed assets of the company to which Caro is applicable, auditor, you need to check that whether all the fixed assets of the company, PPE, have they been physically verified by the management at least once in every 3 years. So if they are coming and checking their ACs only once in every 4 years, then auditor will say, oh no, they are not doing the physical verification at reasonable interval. And if they are doing it every year, wonderful. If they are doing it every alternate year, super. But at least once in every 3 years. That is what has been defined in the guidance note on Caro. Right? How reasonable interval has been defined as? Time gap between two physical verification should not be more than 3 years. And now, as per the PPE register, how many ACs are there in the company? 20,000. As per the 20,000 example, as per the PPE register, how many ACs are there in the company? Air conditioners, say 20,000. On physical verification, how many were found? Say only 18,000. On physical verification, you went to search for the 20,000 ACs, only 18,000 were found. So what is 2,000? Material discrepancy noticed on physical verification. So as per books of account, you are showing how many ACs you have? 20,000. Physical verification by the management, how many ACs were found on physical verification? Only 18,000. So what is that now? A material discrepancy noticed on physical verification. Has it been properly dealt with in the books of account? Can any logical student guess how do you properly deal with it in the books of account? You write off. You have to write off that 2,000 ACs over there, because any of fixed assets register, how many ACs you are showing? 20,000, 2,000 happily just write off. Why? Because they do not physically exist with the company. Right? They do not physically exist with the company. Right. So clause 1B, what does it say? The company has a program of physical verification of the property, plant and equipment and the right of use of asset, so as to cover all the assets once every 3 years, which in our opinion is reasonable. So reasonable interval having regard to the size of the company and the nature of its business. Pursuant to the program, certain PPE were due for verification during the year. So are all PPE going to be due every year? No, the physical verification has to be done once in 3 years. So few of them were due during the current year and were physically verified by the management during the year, according to the information explanation given to us. No, are you all with me? Right? No material discrepancies were noticed on such verification. So they say as per the fixed assets register, 20,000 AC. Physical verification also say 19,998. So 2 ACs were missing. So 2 is not material discrepancy. So then there is no question of whether it has been properly dealt with in the books of account. What example I took? 2,000 were missing. So then that's a material discrepancy. Then you have to check whether it has been properly dealt with in the books of account. Is it clear to everyone? Right. So that is clause 1B. Right? That is clause 1B, where the PPE has been physically verified by the management at reasonable interval and any material discrepancies noticed on physical verification have been properly dealt with in the books of account. What is reasonable interval? The time gap between two physical verification should not be more than 3 years. Right? Now let's come to 1C. All of you with me? Right, all of you with me? Now coming to 1C. 1C had been trending lately. It was there in Caro 16 also, there in Caro 20 also. What is clause 1C? It says whether the title deeds of the immovable properties. Right, so later on, whether again you study these clauses of Caro that much in detail, how much you remember, that all later when time comes, how much time you have, it will be decided. But right now when you are listening to it in the class, at least once, listen to it very, very carefully. To my expectation, it won't be a surprise for me if I see an integrated case study of 10 marks coming in your exam only from Caro 2020. Right, to my expectation and to my anticipation, this because it's so new, it's like an upcoming area. Right, so they could be making one integrated case study and 5 questions are there in an integrated case study. Each question has 2 marks over there, so entire 10 marks. Right, could be a question on Caro. That is very much a possibility. Like, you know, recently in CA final, there is one chapter called as peer review. Right, there are 2 parts in that, peer review and quality review. That peer review chapter, no, it got revised. What they did in the exam, 10 marks, integrated case study on peer review. So it's not that you prepare only for the theory part of the paper. You know, theory 70 marks, yeah, it can certainly come, no doubt about it. We also saw that 5% and 10% ka question, na? Okay, revaluation, it's not 5%, it is 10%. So that's the second possibility. And third possibility, either they ask you the retail question, 1 mark, 2 mark MCQ of Caro, or they can make an entire 10 mark integrated case study on Caro. Okay, right. So whether the title deeds of immovable properties, right? Whether the title deeds of immovable properties, right? Title deeds of immovable properties other than the leasehold properties where the company is the lessee and the lease agreement has been duly executed in the favor of the lessee, right? So where the company is the lessee and the lease agreement has been duly executed in favor of the lessee. So does not include the leasehold land. When does it not include the leasehold land? When the company is the lessee and the lease agreement has already been duly executed in favor of the lessee. Whether the title deeds of the immovable properties, right? Immovable property. Can anybody tell me what is an immovable property? Land and building, right? Immovable property. But land is 2 varieties, freehold land or the leasehold land. When leasehold land is not to be included, when company is the lessee and the lease agreement has already been duly executed in the favor of the lessee, that means it is in the name of the company only. With title deeds of immovable properties, what do you mean by title deed? Ownership document. Can you give me examples of ownership document? Can you give me title deed of immovable property? So title deed means ownership document. Can you give me examples of ownership document? Transfer deed, sales deed, conveyance deed. Sales deed, conveyance deed, transfer deed. These are what the ownership documents. Title deeds of immovable properties. Are they held in the name of the company? Title deeds of immovable properties, are they held in the name of the company? Simple. If Infosys has the building, that building should be in whose name? It should be in the name of Infosys. That is what you need to check and report under clause 1C. Should it happen that the building is of Infosys, but it is in the name of the promoter of Infosys? Or it is in the name of the director of Infosys? No. Title deeds of immovable properties, are they held in the name of the company? If not, if they are not held in the name of the company, right? So they are held in the name of some other person. Then it says, if not, then provide the details thereof. Right? Provide the details thereof. Right? So title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof. Right? So now actually if the company is having any land, any building, in whose name it should be? It should be in the name of the company. But what is happening? Say it's in the name of the promoter. It is in the name of the director. See, sometimes it is genuine also. Like how it could be genuine also. Infosys has a building. Okay, this building they've mortgaged it with a bank financial institution for a loan. So obviously with the mortgage, if a loan has been taken against that building will be in the name of the bank, the financial institution. So then it is not in the name of the company. But now you have a valid reason, okay, because we've mortgaged that building for a loan from a financial institution. It is not in the name of the company, but it is in the name of the bank. But it says we want the details of land or building, or yes, which have been title deeds of immovable properties which are not in the name of the company. Provide the details thereof. Right. So based on our examination of the property tax receipts and the lease agreement for land on which building is constructed, registered sales deed, transfer deed, conveyance deed provided to us, we report that. What do we report that? The title in respect of the self-constructed buildings and the titles of all the other immovable properties other than the properties where the company is the lessee and the lease agreements are duly executed in favor of the lessee, disclosed in the financial statements under the PPE, are whether title deeds of immovable properties are held in the name of the company as at the balance sheet date. So what does it say? Disclosed in the financial statements included under the PPE are held in the name of the company. So all immovable properties of Infosys are in the name of Infosys. And this is what auditor you need to report. Why this clause came in Caro? Again, mainly because of Sahara. There are so many immovable properties which were not in the name of Sahara, but which were in the name of the promoters and so of the group. Right? So that is why they said that if it's an immovable property of the company, it should be in the name of the company. Right? So title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof. Right. Then now coming to clause 1D. Right, coming to clause 1D, right, whether the company, yes, whether any revaluation has been done of the property, plant, equipment, including the right of use assets or the intangible assets or both, whether any revaluation has been done. So question number 1, which I will ask the management, have you done any revaluation of your fixed assets during the year? They say no. So no means then you go to next clause. If revaluation has been done of the property, plant, equipment, including the right of use of assets or the intangible assets or both, where revaluation has been done, then auditor says number 1, whether the revaluation has been done by a registered valuer. Right, whether any revaluation has been done, then whether the revaluation has been done by a registered valuer. Then you also specify the amount of the change, that what is the amount of the change due to the revaluation, and if the change is of 10% or more. Right, if the change due to the revaluation is of 10% or more, then you also give the details for each class of asset, for each property, plant, equipment and the intangible asset. When do you need to give the detail for each class of asset, property, plant, equipment? When it is the change is of 10% or more. Right, when the change is of 10% or more. Right, this point, clause 1 ABC was there in Caro 16 also. Are you all with me? Clause 1 ABC was there in Caro 16 also, but clause 1D and E has only come in Caro 2020. Right, clause 1D and E has only come in the Caro 2020. ABC, what is there? Was it there in Caro 16 also? Yes, but 1D and E, it has come only in the Caro 2020. Right, so now beautiful. In case of Infosys, what does it say? Company has not revalued any of its PPE, including right of use of assets and the intangible assets during the year. So no further reporting of, whether the revaluation has been done by a registered valuer, whether the change is, what is the amount of change, and if the change is 10% or more. Right? So whether the company has revalued its property, plant, equipment, including the right of use of assets or both during the year, intangible assets or both during the year. Right? You can just add the word intangible over there. Right? Or assets. So it means the intangible asset. Right? Or the intangible assets, right, or both during the year. If so, whether the revaluation is done on the basis of the valuation done by a registered valuer, specify the amount of the change, and if the change is 10% or more in the aggregate of the net carrying value of the each class of property, plant, equipment or the intangible assets, right? So each class of the property, plant, equipment of the each class of the property, plant, equipment or the intangible assets, right? So that is clause 1D. Right, revaluation. Right, so how they could ask the MCQ in the exam is also revaluation of PPE is required to report it under which clause of Caro? Clause 1A of Caro, 1B of Caro, 1C of Caro or 1D of Caro. So it is to be reported under clause 1D of para 3 of Caro 2020. Right, so if let us look at the first three clauses also over here. What does it say? Whether the company is maintaining the proper record showing the full particulars including the quantitative details and situation of PPE, then proper record showing the full particulars of the intangible assets, then whether the PPE has been physically verified by the management at reasonable interval and material discrepancy has been properly dealt with in the books of account, right? Then whether title deeds of the immovable properties other than the property where the company is the lessee and the lease agreements are duly executed in favor of the lessee, whether they are held in the name of the company. So whether immovable properties, are they held in the name of the company? If not, provide the details. What details you have to provide? Description of the property. So land or building, whatever it is. Gross carrying value held in the name of. So it's held in the name of the promoter, bank, right? Whether promoter, director or their relative. Period held indicating the range and reason why it is not held in the name of the company. Right? Okay, why it is not? So like I told you, if you have taken a loan from the bank, then you say it has been mortgaged with the bank or the financial institution. And then coming to the last one over there, which is the clause 1E. Right, clause 1E. What does it say? Whether any proceedings have been initiated, that means the fighting started this year or the fighting was going on since a long time, have been initiated or are pending. Right, so say which year, say I am doing the Caro reporting 31st March 2024. So between 23-24, did any proceeding means fighting, litigation. Proceeding means what? Fighting, litigation. Whether any proceeding was initiated or is it pending? You say this matter is going on since last 12 years. So whether any proceedings have been initiated or pending against the company for any Benami property under the Benami Transaction Prohibition Act. What does it say? Simple. Auditor, you have to report whether the details have been disclosed in the financial statements. Whether the details have been disclosed in the financial statements. Right. So generally, like say if I purchase a property, right, if I purchase a property, right, I should pay the consideration for the property and the property should be in my name. If I purchase a property for 5 crore, I should pay the 5 crore and the property should be in my name. Are you understanding that? Okay. But I purchase the property, right? I pay the 5 crore, but the property is not in my name. Or the property is in my name, but I have not paid the 5 crore, then those are examples of the Benami property. Right? Those are examples of the Benami property. Right? So when is it not a Benami property? When I pay the consideration and the property is in my name. But I have not paid the consideration, but the property is in my name. Or, you know, I have paid the consideration, but it is not in my name. Then that would be considered to be a Benami property. And there are a lot of exceptions. Like if I receive it as a gift, then it won't be considered to be a Benami property also. But anyways, what is the reporting under Caro? Whether any proceedings have been initiated or are pending against the company for any Benami property under the Prohibition of Benami Transaction Act, whether the details have been disclosed in the financial statements. Students who have good logical reasoning, can they quickly tell me where can I find the details of this in the financial statements? In the notes to account, in the contingent liability, in the contingent liabilities. Right, so simple. I just have to go to the notes to account and check, right, whether the proceedings initiated. So first I need to check, are there any proceedings initiated or pending? If nothing is initiated or pending, story is over. But if initiated or pending, go to the notes to account and check in the contingent liability whether the details have been disclosed in the financial statements. Let us see about Infosys. Now, the moment you read it over there, you want to check what has happened in Infosys. Right? So, no proceedings have been initiated during the year or are pending against the company as at 31st March for holding any Benami property under the Benami Transaction Prohibition Act and the rules made there under. So there is no question of it being details being disclosed in the financial statements. Right? So that just completes our clause 1. Does everybody understand that? Right? Did you understand? So how? Right now all the auditors, they are struggling, right, with the new clauses of reporting under Caro 2020. Right? Because so much. So now only what we studied is clause 1. Are you seeing this clause 1 over here? Right, and did we see it in the report of Infosys also? Right. So, clause 1, which is regarding the property, plant, equipment and the intangible assets. Right. Now, coming to clause 2, which is regarding the inventories and the working capital. Right. Clause 2, which is regarding the inventories and the working capital. So, you have the clause 2A and the clause 2B. Right. What was clause 1B of Caro 2020? Clause B, small b of Caro 2020, whether physical verification of property, plant, equipment has been conducted by the management at reasonable intervals. Did everybody get my question? What did I ask? What was clause 1B of Caro 2020? So whether fixed property, plant, equipment have been physically verified by the management at reasonable intervals and any material discrepancies noticed on physical verification, have they been properly dealt with in the books of account? Are you all with me? Right? That was clause 1B of para 3 of Caro 2020. Now, what is clause 2A of Caro 2020? Whether inventories have been physically verified. Right, whether inventories have been physically verified by the management at reasonable interval. Now for fixed assets, property, plant, equipment, what was the reasonable interval? Once in 3 years. Now for inventory, what is going to be the reasonable interval? At least once in a year. In property, plant, equipment, okay, if physically verified at least once in 3 years. But for inventory, what is going to be the reasonable interval? At least once in a year. Right, so whether inventories have been physically verified by the management at reasonable intervals. Till here, is it similar to 1B of Caro 2020? Right, there it was whether PPE has been physically verified. Now it is whether the inventories have been physically verified by the management at the reasonable intervals, right? Has been verified by the management at the reasonable intervals, and now there is a change over there. What does it say? Whether the procedures followed by the management for the physical verification of the inventory, whether they have been appropriate. Right, in the opinion of the auditor, the coverage and procedure of such verification by the management is appropriate. So the procedures followed by the management for the physical verification of inventory, whether the procedures have been appropriate, whether the coverage and the procedures has been appropriate. Right, some time back, right, we had discussed an auditing standard, SA 501. Audit evidence, specific consideration for selected items. What was the first selected item of 501? Existence and condition of inventory. Second one, completeness of litigation and claims. And third one was the presentation and disclosure of the segment information. Right? Existence and condition of inventory. The client says that we have 20,000 kg of cement in stock. I want to ensure really does that cement exist. Did I use one word over there? As an auditor, what are the audit procedures if I want to check really does my client have so much of inventory? In order to check the existence and condition of inventory, at least one student in the class who remembers the word. Let me tell you again, it's not that you don't remember, it's just that you're not being attentive. SA 501. Audit evidence, specific consideration for selected items. It's straight in the class. Okay. Right. Existence and condition of inventory. So my client, say Tata Motors is saying, we are having 20,000 cars in stock. I say, really? You have 20,000 cars in stock. No, physical verification of inventory is whose responsibility? It is the responsibility of the management. As an auditor, you need to, yes, you remember the word ATTEND. Right? Attend the physical verification count being conducted by the management at the year-end date unless impracticable. So I told you, 31st March, you go to any CA form empty. Why? Because everybody is gone for a stock take or a cash count. Right? So attend the physical verification count. So now, physical verification of PPE. Physical verification of PPE. Auditor, you may attend, you may not attend. You can just take the physical verification report from the management for PPE. But for inventory, auditor, now you must attend. Why you must attend once Caro is applicable? Because boss, now I have to report whether the coverage and procedures of the physical verification of inventory being followed by the management, is it appropriate, right, to the size and requirements of the company? Are you understanding that? The coverage and procedure, auditor also has to comment on the coverage and procedure. And what was the second part of clause 1B of Caro 2020? What was the second part of 1B of 2020? Material discrepancies noticed, or have they been properly dealt with in the books of account? Now for inventory, what does it say? Discrepancies of 10% or more. Right? Discrepancies of 10% or more. So there they say material discrepancy. Here they've defined. Right? Here they said discrepancies of 10% or more. Again, whether they have been properly dealt with in the books of account. Right? Have they been properly dealt with in the books of account? Right? What you are studying right now, you can keep it in your mind, assuming that Caro 20 will not change very soon now. Right? Next 5 years you will require it in your inter, for your articleship and for your CA final also. Okay, right. So what does it say? Whether inventories have been physically verified by the management at reasonable interval. Then what does it say? Whether the coverage and procedure for such verification being followed by the management, is it appropriate? And third point over there, what's next point over there is what? Discrepancies of 10% or more in the aggregate for each class of inventory. What are the classes of inventory? Raw material, work in progress, finished goods, tools and ties, loose tools, and a spare parts, right? So each class of inventory, again, discrepancies of 10% or more, have they been properly dealt with in the books of account? Right? Have they been properly dealt with in the books of account? Are you understanding that? That is clause 2A, which is regarding inventory. Infosys, should I see? Should I see? No, because why? They have no inventory. The company does not have any inventory, and hence reporting under 3.2A of the order is not applicable. Obviously, it's a software company, so no inventory reporting applicable, right? So that is why no. Yeah, right. That is why no inventory reporting will be applicable. But if I come to an earlier report, like say in the Caro 2016, or some another company, if I come to MRF, now will MRF tire have inventory? Obviously, they'll have huge amount of tires in the inventory. The inventory has been physically verified by the management, by the management during the year. In our opinion, the frequency of verification is reasonable. Now, in Caro 16, they had given material discrepancy only. In Caro 20, they have come up with the concept of the 10% or more. So that is why in Caro 16, what was reported? No material discrepancies were noticed on such physical verification, right? No material discrepancies. So there is no question of it being properly dealt with in the books of account. Right. Now 2B is something which has come new. It was not there in Caro 2016. Right. Whether the company has been sanctioned the working capital limit, right? Working capital limit, right? In excess of 5 crore against the security of its current assets. Yes, against the security of the current assets. So have they used the loan? Have they taken the loan? We don't know. But has they been sanctioned a working capital limit in excess of 5 crore against the security of the current assets from any bank or financial institution? What does it say? Whether the quarterly returns or statements submitted to the bank, are they in agreement with the books of account? Are they in agreement with the books of accounts. So such an additional work they've put on the auditor. Bankers are very happy. The banks, which are giving loans to the companies, they are very happy. Yes, because now say, if a company takes a loan from the bank, do they have to submit their quarterly return statement to the bank? Right, say a company, say Infosys has taken a loan from State Bank of India, working capital limit in excess of 5 crore against the security of the current assets. So now will Infosys have to submit their quarterly return statement to the bank? But now bank says, who knows, window dressing might be done. Bank might say that actual debtors of the company are only 90 crore. What they are showing in the quarterly return, that 120 crore. Possible, no? Quarterly returns, have they to be submitted by the company to the bank? Yes, but how does the bank come to know whether these quarterly return statements submitted to the bank, are they in agreement with the books of account? It says no problem. Statutory auditor is there, no? We will tell him. And the statutory auditor of the company is there, he will check. Right? So whether the quarterly returns or statements which are submitted to the bank, are they in agreement with the books of account? Are you understanding this point? Where at any point of time, so whenever you see any point of time, it means 365 days. The company has been sanctioned. So whether it has actually taken the loan or no, but it has a sanctioned limit. Is sanctioned working capital limit in excess of 5 crore. So 5 crore 1 rupee. It is not equal to or more than. It is only more than 5 crore. It is not equal to 5 crore. It is only more than 5 crore in aggregate from banks and financial institution on the basis of the security of the current assets, whether the quarterly returns or statements filed by the company with such bank and financial institution, are they in agreement with the books of account of the company everywhere? What do they write? If not, give the detail. For title deeds of immovable property also, what did they say? If immovable properties are not in the name of the company, give the detail. So now what they are saying, if quarterly returns or statement, as per the quarterly return, what they have told to the bank, what has the company told to the bank? That we have debtor of 120 crore. This is what the company has told to the bank or the financial institution in the quarterly return. Auditor did the checking that whether quarterly returns or statements submitted to the bank, are they in agreement with the books of account. As per the books of account of the company, how much are the debtor? 90 crore. So will auditor have to give the detail? Yes, auditor will have to give the detail for the same. Right. So the company has not been sanctioned. Wonderful. Right? Working capital limit in excess of 5 crore in aggregate at any point of time during the year from bank financial institution on the basis of security of current assets, and hence reporting under clause 3B of the order is not applicable. Is it clear to everyone? Company has not been sanctioned. Working capital limit on the security in excess of 5 crore in aggregate at any point of time on the basis of security of the current assets. Is it clear to everyone? So that completes our clause 2. What is clause 2? Right, inventories and the working capital. So 2A is regarding the inventories and 2B is regarding the working capital. Right, so 2A, is it similar to 1B? 2A, is it similar to 1B? And a physical verification at reasonable interval. But only what is the difference for inventory? The coverage and procedure, is it appropriate, and discrepancy of 10% or more, whether it has been properly dealt with in the books of account. And then B, whether it has been sanctioned and at any point of time. Working capital limit in excess of 5 crore against the security of the current assets, whether the quarterly returns or statements are submitted to the bank, are they a bank or financial institution, are they in agreement with the books of account. Right.